Okay, good morning guys. Let's get this session started, and we've definitely got some interesting moves happening right now. If you look top right, we've got European stocks nicely pushing on here. Similar scenario with Euro stocks, but I'm showing you the DAX here on the top right. With the Euro stocks, and let me bring that chart in as well, because we've been looking at a trend channel. It was a little bit weak in that it broke, false breakout on the 31st of July, but look, we're pushing higher, and the price point we've just tested, so this morning's high now, the price we've just got to, let me just add another line, which was yesterday, Monday's high. So we're up through Monday's high, now testing this high point that we had back on the 24th of July. So European stocks nicely bid. You've got 0.83% higher on the day already for Euro stocks. Similar gains for the DAX, so nice and positive. We've had some Spanish PMI numbers already, and this will kind of shape the morning with lots of services sector PMI figures, and Spain's come in with some very strong numbers. Here's the chart. So looking at the last sort of 12 months, and the figures this morning, this was released at 8:15. So Spanish services sector PMI 59.7, much better than the expected 55.8, and almost puts us back up at the high point for the year set in April. So nice solid reading here, and this kind of follows up the positive numbers that we had on the manufacturing side in Europe on Monday. So we've actually had a pretty decent start to the week on some key data points. We talked about this on Monday. You know, is this signs that the Eurozone economy is beginning to revive? Is this a signal that quantitative easing from the central bank is beginning to take its effect? Is it a sign that the Greek risk diminishing is just restored some confidence and is allowing these economies to begin to turn in some meaningful growth? So you've got a pretty bullish start here on European stocks. The same can't be said for the euro, however, but actually it's not really the euro, it's perhaps the dollar, although we'll look at cable in a minute. But at a big step lower yesterday afternoon, after the European close, after 6 p.m, we had a big dollar move to the downside, so the euro dollar was trading around about 109.70. It was a pretty choppy session yesterday, but then we got some direction. And in the end, here we are trading more than 100 pips lower, 108.60, with S1 just holding things up on the downside at the moment. But this is new lows for the week, of course. So, what happened? What happened last night to trigger this movement? We had some pretty interesting comments from the Fed. So this is a guy called Lockhart, and if you look at your kind of T-notes chart, then T-notes headed lower off the back of these comments. We'll look at the S&P in a minute, which I would say has been fairly resilient to this hawkishness. So let's just talk about what he said first. So this is the Atlanta Fed President Lockhart, who, well, you could say is, in terms of what's his normal stance, sort of on the hawkish, dovish scale, you would say he's fairly centrist, but I would say with a slight hawkish slant. But the important thing about what he said last night is that he's kind of changed his message. So let me just quote what he said. Hang on, let me find the quote. So he's speaking to the Wall Street Journal, and he said, going into September's meeting, as of today, he believes that the economy is ready and it is an appropriate time to make a change. He said, I think there is a high bar right now to not acting, and that it will take a significant deterioration in the economic picture for me to be disinclined to move ahead. There was some mention in the article about inflation, and that Lockhart said that it could come under pressure in the time ahead due to the recent decline in the oil market, although Lockhart said that he was reasonably confident inflation is on a path towards its goal given the slack in the labour market and broader economy is diminishing. The reason why this is interesting is because back in May, he said that he is more prepared to take the risks of waiting rather than being too early with the rate hike. So in May, let me just repeat that, his message was, we're probably better off waiting, i.e. delaying any hike, and we'll deal with those risks of delaying longer. That's probably the best path. That's what he said in May. Now he's saying the economy's ready. Basically, I'm voting for a hike in September, which is now in 5 weeks' time. So hawkish comments from Lockhart after 6 p.m. last night. Dollar strength. You had yields pushing higher across the US curve, particularly on the short end, of course. And so typical hawkish response from markets, except when you look at the S&P. Let me just bring this chart into play here. The S&P yesterday did tick lower off these comments, and we went down. We almost tested the low point of the week set on Monday, but then actually rebounded and finished relatively unchanged. And we're still trading around about the price points when these comments were made last night. So it's quite interesting that the S&P has been able to hold up in the face of some hawkishness here. And that might be because, ultimately equities are quite bid this morning generally. So the fact that the S&P is flat on the day when you're getting the DAX up almost 1% already, perhaps this hawkishness last night, rather than leading to a sell-off, it's prevented a rally. And we have had definitely the S&P underperforming this week. I mean, check out these two charts at the top of my screenshot. The S&P on the left and the DAX on the right. And if I just zoom back, really over the last few days, for the S&P, generally we've declined. It's been very choppy, a messy session yesterday, fairly range bound, but ultimately we are lower. If you think about the start or the end of last week, the high on Friday for the S&P was 2109, and here we are trading at 2087. So we're 20 points worse off since Friday's high. But then check out the DAX. Well, the DAX, Friday's high on the DAX was 11,300. The DAX has added 250 points to the upside here. So DAX 250 points higher, at the same time the S&P is 20 points lower. Quite an unusual divergence. And, this is really explains the week so far, and that is that we've had some pretty encouraging data from the Eurozone on the PMIs. We've got some positive noises coming out of Greece as well. The Greek finance minister, Takealot is his name. He's been pretty promising. He's been commenting that the discussions with our creditors has been going better than expected, and that he has led us to believe that basically a deal's going to be done by the end of the week, or at least agreed in principle, with the idea that over the next couple of weeks this stuff can get voted through various parliaments in time for a third bailout agreement to be nailed, signed off before the 20th of August, when Greece have their next payment to make to the ECB. They got I forget the figure, 2.5 billion euros, I think, is the 20th of August payment, and they're trying to not rush through. I mean, they've been negotiating this for 8 months, so it's hardly a rush, but they're trying to get this done before that date. So This is all helping the European equity space and the DAX. Decent gains over the last week or so, adding to those this morning, and climbing back to the levels we saw at the start of last week, before we had a pretty big sell-off. 24th of July, Friday, and then the 27th of July, the Monday, big move lower. That's all been reclaimed now. But the US equity space has failed to join in with this rally. And that is a lot to do with perhaps the fact that it's more exposed, I would say, to the energy sector. And we've seen, as you see on my chart on the bottom right here, the price of oil continue to drop sharply. So this has had a big impact on some of the energy giants in the S&P 500. So that's one thing that's held it back. And then the other thing is this hawkishness from the Fed, and the fact that we are now only 5 weeks away from their next meeting. And as markets are priced now, there is bang on a 50% chance of a September hike. After the comments from Lockhart last night, the probabilities have raised marginally. We're now at 50%, which means the meeting in 5 weeks' time is going to be, it's going to be a humdinger from a market reaction point of view, because it doesn't matter what happens. It doesn't matter if they hike or they don't hike. you're going to get some pretty substantial reaction. So big meeting ahead, of course, in 5 weeks' time. And if Lockhart's got anything to do with it, we're going to get a hike. I've had a view, all year, that we're not going to see a hike till the end of the year in December. I'm still clinging on to that view. That view has, of course, become less and less likely, but I still believe that's the case. But of course, big figures coming towards the end of the week on the labour market, because that's something else Lockhart mentioned last night. He said that, with reference to the Fed statement that we had last week, and in the statement, the Fed said that they were looking for some improvement in labour market conditions, and we didn't really know, of course, what that sum meant. I mean, what do they mean by that? How much improvement? And Lockhart tried to qualify this word last night, and he said that the addition of the word sum to the FOMC statement in relation to further improvement in the labour market was a qualifier that conveys to the public that we're getting close. So, definitely interesting comments last night. The other thing overnight that is perhaps also helping with the European equity space, certainly the DAX here now, it's still going here as I'm talking. You're still seeing a push higher. That's 1% up for the day now. That's the highest we've traded for a few weeks. Another thing that's perhaps helping here, and certainly the DAX would benefit from this, is news from China. And the German economy is perhaps the most exposed to China growth than any other European country, given the amount of exports that the German manufacturers ship off to China. But news from China last night is that the government's stepping it up yet again in terms of their efforts to try and stimulate a flagging economy. We had numbers out of China last night on the services PMI. It actually came in better than expected, but it wasn't enough to offset the weak manufacturing figure that we had on Monday. And so net the composite PMI, which basically adds up the two, manufacturing and services, dropped. So you've got still real concerns. So the Chinese government has stepped up again now. They've launched a 1 trillion renminbi, which is about, let me get this right, in terms of dollars, you're looking at about $150 billion, okay? So about $150 billion of infrastructure bonds have been given the green light. This is where state-owned banks are issuing bonds, which will be, by the way, purchased by, commercial banks owned by the state. And then this is designed to allow these state-owned banks to increase lending for infrastructure projects. It's basically fiscal stimulus for yet more infrastructure plans. Now, we've seen massive infrastructure stimulus over the last few years, but this has mainly been a sort of local government-led venture with local governments supporting the funding for these projects. And this is something that has been of concern, talking about the shadow banking system and the credit bubble in the shadow banking system. So what Beijing have been doing over the last 12 months is just trying to curb that, fearful that these local governments have gone too far, overexposed themselves. So this is actually the central government now ramping up an infrastructure fiscal stimulus plan. So they're going to go ahead with the first third of this is going to be issued soon, is the comment. I don't know when soon means, but probably, in the next week. And so this is another, we've had so many policy decisions made by China and their central bank over the last few weeks, most of it in response to the collapsing stock market. But we've had straight out interest rate cuts, we've had cuts to the reserve requirement ratio. Now we've got a $150 billion infrastructure project. So this is also helping with the mood, I would say, this morning. So, lots happening. We've just had a couple of more PMIs coming in. So the Italian services PMI disappointed. So this came in at 52. We were expecting 53. But what I'd say about that is the Italian manufacturing number on Monday was very good. So, okay, the services has disappointed slightly, but taking both together, it's not bad. France's services PMI was in line at 52. We're going to get the German number. It's due in 2.5 minutes. Let's just have a very quick look at the calendar for the data calendar, because it's pretty packed, and then I'm going to get off the mic so we can trade these PMI numbers. So we've got German PMIs coming. The services sector PMI is expected at 53.7. We then got the Eurozone as a whole. That's expected at 53.8. That'll be delivered at 9 o'clock. Then at 9:30 we get the UK PMI services number. We're expecting 58. Then at 10 o'clock we get Eurozone retail sales figures. Then we push into the afternoon where important numbers coming this afternoon as well from the US. Here we go. So at 1:15, ADP employment change, very, very important. Anything labour market related is very important. And obviously the big one, payrolls and average hourly earnings coming on Friday. But we're expecting 215,000 jobs to have been created in the private sector in the month of July. We've got the US services numbers and the ISM non-manufacturing numbers at 2:45 and 3 o'clock. Then we got oil inventory data. The API last night indicated that there had been a drawdown, that's a drop in crude oil inventories of about 2.5 million barrels. Today's forecast from the Department of Energy is 1.6 million drawdown. We had a big drawdown last week, and it completely failed to hold up the dramatic decline we've seen in oil prices over recent weeks. So we'll see what happens today with the Department of Energy. So packed out session. You got European stocks. Even though these Italian numbers have slightly disappointed, you've still got European stocks on a march, already up over 1% from the DAX's point of view. That is outperforming. Only marginally though. The Euro Stoxx is up 0.97% as I speak. So you've got interesting news out of China. You've got more decent data on the PMI front from Europe. You've got a hawkish Fed commentary last night, which is important. And these are all the dynamics you've got to think about as you're trying to predict direction. I'm going to call this German number. We're just about to get the German manufacturing PMI data right now. Let me just see what this is going to be delivered at. Well, I'm going to get off the microphone and then you can trade it. All right, guys, so enjoy the session. It's going to be a busy one, plenty of data. Thanks a lot.